Hi there again, and this is Paul here at Payroll Matters in Ireland, and today I want to talk to you about the Home Carer Tax Credit, what it is and how to claim it. The Home Carer Tax Credit, or HCTC, may be available to married couples or civil partners where one spouse or civil partner, or the home carer, cares for one or more dependent persons. From January the 1st, 2025, the maximum value of the credit is €1,950. The table shows the value of the home carer tax credit for previous years of assessment. This video update outlines the conditions which must be met to claim the home carer tax credit and the interaction between this credit and the increased standard rate band available for dual income married couples and civil partners. 2. The conditions for the home carer tax credit. The conditions which must be met are as follows. A. The married couple or civil partners must be jointly assessed to tax. No credit is available where married couples, civil partners are taxed under separate treatment as single persons. B. The home carer must care for one or more dependent persons. A dependent person is a child for whom Department of Social Protection child benefit is payable, a person aged 65 years or over, or a person who is permanently incapacitated by reason of mental or physical infirmity. A dependent person does not include a spouse or civil partner. C. The dependent person must normally reside with the married couple or civil partners for the tax year. Certain exceptions apply where the dependent person is a relative. Further details are outlined about this a little later. D. To obtain the full credit, the home carer's income must not exceed €7,200 in the tax year. Where the income is over €7,200, a reduced credit may still be available, and we will give further details on this a little later, so stay tuned. E. The couple must not claim the increased standard rate band for dual income couples in the year they wish to claim the home carer tax credit. We will also give further details on this a little later. 3. Does a relative have to reside with the home carer? No. Dependent persons who are relatives can be cared for outside the home if they reside next door in a neighbouring residence, on the same property, or within 2 kilometres of the claimant. There must, however, be a direct communication link, that is, a telephone alarm system, between the two residences. A relative includes a relative by marriage, or a person for whom the claimant acts as a legal guardian, but not a spouse or civil partner. How does the income of the home carer affect the tax credit? Where the home carer's income does not exceed €7,200 in the tax year, the full credit may be claimed as outlined here. For the tax years 2025 and subsequent years, if the home carer's income is over €7,200 but less than €11,100, a reduced tax credit is still available. This table shows the upper income limits for receiving a portion of the home carer tax credit for the current and previous years. For the purposes of this tax credit, income is taken as income chargeable to tax, such as income from a part-time job, rents, dividends, etc., but does not include carer's allowance or carer's benefit payable by the Department of Social Protection. Income which is disregarded for tax purposes or which is exempt from the charge to tax is also excluded. If the income of the home carer exceeds €7,200, the tax credit is reduced by 1/2 of the excess. If the income of the home carer exceeds the maximum limit above, then no tax credit will be available. Examples of how the tax credit is calculated for different levels of income for the tax year 2025 and subsequent years is set out here on this table. If the income is €11,100 or more, the home carer tax credit is not due. Example: Kevin and Alan are civil partners and jointly assessed. Alan is a home carer to a dependent relative who lives less than 2 kilometres away. Alan has no personal income. The couple are entitled to the full home carer tax credit of €1,950 in 2025. Example 2. Kate and Alison are married and jointly assessed. Kate is a home carer to a dependent relative who lives less than 2 kilometres away. Kate earns €11,500 per annum of employment income. The couple are not entitled to the home carer tax credit for 2025 as Kate's income is above the upper income limit for the credit, which is €11,100 for 2025. Example 3. John and Mary are married and jointly assessed. Mary has been a home carer to a dependent relative who has lived with the couple since 2018. For 2025, John has an income of €20,000 and Mary has an income of €7,500. Mary is entitled to the following home carer tax credit for 2025. Home carer income, €7,500. Difference between €7,500 and €7,200 is €300. Half of the difference, or the excess, is €150. The home carer tax credit due, €1,950 less €150, which is equal to €1,800. 5. What happens if the tax credit is granted and in the next year the home carer's income exceeds the limit? If a home carer's income exceeds the upper income limit in a year, that's €11,100 for 2025, the tax credit will still be due for the year, provided that the other conditions of the tax credit are met and the tax credit was granted for the immediately preceding tax year. The amount of the tax credit is restricted to the amount granted for the immediately preceding tax year. However, if a married couple civil partners claim the increased standard rate band for dual income couples in a year after the home carer tax credit was claimed by the couple, the home carer tax credit will not be due in that year, as the increased rate band and home carer's tax credit may not both be availed of in the same year of assessment. Example 4. Anna and Ronan married in 2000 and are jointly assessed. Anna has been a home carer since 2009 and qualified for the home carer tax credit from 2009 to 2024. In 2025, Anna intends to take up employment which will pay her more than €11,100 in 2025. The home carer tax credit will still be due to Anna and Ronan in 2025 if they do not claim the increased standard rate band in 2025. The credit will, however, be limited to the amount Anna and Ronan were able to claim in 2024. If Anna continues her employment in 2026 and earns income in excess of €11,100, Anna and Ronan will not be able to claim the home carer tax credit again in 2026. 6. The home carer tax credit versus the increased standard rate band for dual income couples. A couple cannot claim both the home carer tax credit and the increased standard rate band for dual income earners in a year. They may claim whichever of the two is more beneficial. In practice, revenue will grant the more beneficial treatment. For 2025, the standard rate cut-off point is €53,000 for dual income married couples or civil partners, subject to an increase of up to €35,000. The increase is limited to the lower of €35,000 or the amount of the income of the spouse, civil partner with the lesser income. This increase is not transferable between spouses and civil partners. Example 5. Mark and Andrea are married and jointly assessed. Mark is a home carer with no income. The couple have qualified for the home carer tax credit since 2011. Mark plans to take up employment in 2025, where he will earn an annual income of €7,000 per annum. Mark and Andrea are unsure if it would be more beneficial to claim the home carer tax credit for 2025, or if they should claim the increased standard rate band instead. Andrea earns €47,000 per annum. Tax computation: if the home carer tax credit is claimed instead of the increased standard rate band, as Mark's income is less than €7,200, the full home carer tax credit of €1,900 is due. Total income of €54,000. Tax as follows: €53,000 multiplied by 20% is €10,600. €1,000 at 40% is €400. The total income tax would be €11,000, less the home carer tax credit of €1,950. Income tax due before relief for personal tax credits is €9,050. Tax computation if increased standard rate band is claimed instead of the home carer tax credit. Total income of €54,000 taxed as follows: €54,000 multiplied by 20% is €10,800. Income tax due before relief for personal tax credits is €10,800. Note: claiming the home care tax credit is more beneficial for Mark and Andrea. Income tax liability of €9,050 versus €10,800. Example 6. Alice and John married in 2016 and are jointly assessed. Alice has no employment income and is a home carer for her children. Alice made a number of investments with her personal savings and will receive investment income of €9,000 from these investments in 2024. Alice and John are unsure if it would be more beneficial to claim the home carer's tax credit for 2025, or if they should claim the increased standard rate band instead. John earns €44,700 per annum. The computation if the home carer tax credit is claimed instead of the increased standard rate band. Total income taxed as follows: €53,700. 53,000 at 20% is equal to €10,600, and €700 at 40% is €280. The total income tax due €10,800, less the home carer tax credit €1,950. That's €9,000 minus €7,200 multiplied by 50% is €1,050. Income tax due before relief of personal tax credits is €9,830. The home carer tax credit due in this case is calculated as follows: income of home carer €9,000. Difference between income and €7,200 is €9,000 minus €7,200 is equal to €1,800. Half of the difference is equal to €900. The reduced tax credit €1,950 minus €900 is equal to €1,050. The tax computation if increased standard rate band is claimed instead of the home carer tax credit. Total income taxed as follows: €53,700 at 20% is €10,740. Income tax due before relief for personal tax credits €10,740. Note: claiming the home carer tax credit is more beneficial for Alice and John. The income tax liability of €9,830 versus €10,740. How to claim the tax credit. PAYE customers can make a claim in the current year using PAYE services in My Account as follows: sign in to My Account. Click on Manage your tax for the current year. Select Add New Credits. Select you and your family and home carer tax credit. Complete the required fields including the dependent's PPSN number and date of birth. Complete the process and submit. An individual can also make a claim for previous years by completing an income tax return. Using my account. To complete an income tax return for one of the previous 4 years of assessment, the following steps should be followed. Sign in to my account. Click on Review your tax for the previous 4 years. Request a statement of liability. Click on Complete your income tax return. In the tax credits and reliefs page, select you and your family and home carer tax credit and add it as a credit. Complete and submit the form. Before I leave you for now, can I ask those of you that have not already done so to hit that subscribe button and also to turn on YouTube notifications for this channel. We have this video guide here on how you can turn on notifications for this channel so you can get an alert every time we post a new video guide, as we have many more helpful pay, income tax and other work related guides and videos to bring you. It costs you nothing to subscribe, but could help you save hundreds or even thousands of euro into your hand on pay and tax. Go on, hit that subscribe button. Go on. See you next time.